Hey yo, what is going on, viewers of the tube? My name is Tyler and welcome to the channel you just might pass on at first glance. But once you get a taste, we become an irresistible snack. We're the passion fruit of YouTube. You know the squeeze, it's time for Chico Crypto. Let's begin today's show off with some Tyler analysis of, you thought I was gonna say Bitcoin, but today we are gonna look at Ethereum. Now the reason I hate trying to do price analysis on any other crypto than Bitcoin is if BTC goes down, markets go down, and all of that altcoin TA work you did goes out the window. So the reason we are looking at Ethereum's price is because today is another DeFi deep dive, highlighting two more projects which are going to be altcoins leading the charge into the next bull run. So, since the beginning of September, Ethereum was on a major run, actually breaking through 220 for a quick second. But like I mentioned, the Bitcoin price took a major dump because of Bakkt, and it took Ethereum down with it, dipping below 160 even, before rebounding. Now, since the dump, Ethereum has been looking bullish, on October 2nd pushing through 180 resistance, fell under, then pushed through it once again on the 8th, turning it into support, actually testing 195 the 10th through 11th, but couldn't make it, and as of today we are hovering above 180 support. Now, comparing the Ethereum and Bitcoin charts side by side over the same time frame, it's kind of obvious to see Ethereum is more bullish right now. But this becomes way more clear when adding the Bitcoin price to that Ethereum chart, and then taking away the USD price. Thus, the increasing linear slope becomes extremely apparent. Now, pulling out the market cap dominance chart over the same time period, Ethereum has gained 2 percentage points from under 7% to nearly 9%. Which is extremely bullish when you compare it to the others category. This includes every single other altcoin except those not highlighted in the chart below. All other 2,970 altcoins. Ethereum gained in the same time period more market cap than this others category. Others only went from 12.8% dominance to 14.3%, a gain of 1.5%. As many coins in this category were actually bleeding and going into Ethereum, which last month I tried to explain and said would happen. It still to this day baffles me that the others passed Ethereum all the way back before January of 2018 and has been more dominant ever since. Although since April of this year the gap has been closing as Ethereum was above 10% while others was at 22% back then. And the fact that this others category, which is 95% shat coins, is still to this day more dominant than Ethereum, signals to me Ethereum is going to pop even further. This is the single thing that is still the most out of balance in the crypto world, and I kind of wish I could acquire all the power stones and snap my fingers, turning them to dust.
You should have gone for the head.
And I still feel like this will continue for some more time. There are some great projects in the others category, especially the ones connected to DeFi, but 95% are dog poo poo, and a solid majority of their cap, in my opinion, will flow into Ethereum. Why? Well, Ethereum is about to become a very special token, with Ethereum 2.0 and proof of stake. The macro bull case will be either proven or disproven in the next 12 to 18 months. Which is almost perfect timing for the next parabolic run, based on Bitcoin's historical 4-year halving cycles. The next one happens mid-2020. Ethereum 2.0 is a multi-year implementation and upgrade, which begins late this year and ends in 2021. During this time, 4 main upgrades are coming. The first thing that is coming, which according to the roadmap, just next month, is staking from the main chain to the beacon chain. Now, to help explain what is going on, the beacon chain will be a separate proof-of-stake chain that is going to run parallel to the proof-of-work chain. The main responsibility of this chain in the beginning is to maintain the set of validators for the proof-of-stake consensus, and to validate the new blocks added to that chain. So basically, you will have the proven proof-of-work chain working side by side to the proof-of-stake chain, which can be checked against the proof-of-work for 100% secure validation in the beginning stages. And this is why Ethereum is going to become that much more in demand, and in consequence, reduce the available transactable supply. To become a validator to stake Ethereum, you are going to most likely need to stake at least 32 Ethereum. Those who are demanding and buying Ethereum are essentially accumulating their digital ASICs of the future, as 32 Ethereum and staking validators are going to replace hardware for validating transactions and getting transaction fees. But the gorgeous and amazing thing is these ASICs will never be replaced by new, better models. So locking up by validators is going to put immense pressure on the supply. But the one I have been highlighting many times in the past is Ethereum Defi. And just recently, the total value locked in Ethereum Defi has crossed 3 million Ethereum, increasing by 600K in the past couple months. And this brings me to what some of you have been waiting for, my next DeFi picks based on some Chico research. Now a token, a stablecoin, and a protocol upgrade is going to increase this total DeFi value locked up very, very soon. What am I talking about? I'm talking about MakerDAO, and the first decentralized smart contract governed stablecoin DAI, and the protocol upgrade coming November 18th is multi-collateral DAI, which is going to allow more tokens to be locked up as collateral in MakerDAO CDPs, which creates the DAI. Maker token holders, the governance token, voted on the first tokens to be evaluated and added to the protocol. This included Augur, BAT, DigiXDAO, Ether, Golem, Amisego, and ZeroX Protocol. Voters selected Ethereum and Basic Attention Token for the first two collateral types to be evaluated by the Maker Risk and Integration team, and the risk reports are going to drop soon. But I would suspect the next types to be Augur, DigiXDAO, and ZeroX Protocol, as each of these projects are already integrated with Maker or DAI in some form. The many integrations with MakerDAO and soon multi-collateral DAI allow it to dominate the DeFi ecosystem, with current dominance at nearly 53%, which is going to grow with the help of another one of my favorite DeFi projects, Chainlink. So at DevCon, Chainlink announced Oracle price data networks for Bitcoin, DAI, USDC, ZeroX, Augur, Wrapped Bitcoin, and Basic Attention Token.
We've had so much success so far doing this, and it's been done so securely over the past number of months that we're basically committing to expand the amount of reference data networks. These are the next 7 reference data networks that we're going to be launching. Bitcoin, DAI, USDC, ZeroX, Wrapped, WBTC, and BAT prices. These prices and fees were chosen based on the needs of our users and customers. They're meant to service systems like Compound, partially synthetics, partially other systems that are going to be building their contracts to secure their value using these reference data networks.
Starting to see similarities of tokens mentioned. But this is the first decentralized price Oracle data feed for DAI. And during DevCon, Mariano Conti, a developer at MakerDAO Foundation, working on oracles, tweeted this: "To all Link Marines, I'm friends with Sergey. We've always been friends. Expect news soon." As most of you know, the MakerDAO ecosystem is top on my list for a long time, and that patience is about to pay off. Looking at the USD price chart, you would be like, what's so special about that? Well, just like the Ethereum chart, looking at the price in Bitcoin, you see the bullish case over the past month. But there is another DeFi project that has outdone both Maker and Ethereum over the past month. And this has been a project I have been accumulating for oh so long. That is the ZeroX Protocol, going from a low of 15 cents in early September to just over 30 cents as of yesterday. A 2x in a month. But looking at the BTC value, it's even more bullish, getting closer to 3xing. So that coin pumper that people listen to for some reason, Tika Tiwari,
the first ever Glenn Beck-backed cryptocurrency course for you,
called ZeroX as one of his picks a few weeks ago for his Palm Beach Confidential newsletter. And that has been a contribution to some of the pump, and getting it started earlier than it should. So I've mentioned this month, security audits are being completed for version 3 of the ZeroX protocol. And then at the end of the month, the governance vote for implementation takes place. The vote will pass, and then on 11/11, V3 goes live on the mainnet. Staking in the ZeroX Mesh network is coming with this upgrade, which are both important. I highlighted staking last time, and this time what we want to understand is the importance of ZeroX Mesh. So ZeroX is a protocol of relayers, basically DEXs and decentralized future markets sharing liquidity between each other. With V2, you needed a server to run a relayer, a backend. With Mesh, you have a new type of serverless relayer, where all you need is a front-end UI. And the 11/11 release will have built-in browser support, as seen from this Medium article. And this is big because any DApp, wallet, user from MetaMask to Mu will be able to spin up a 0x mesh node and share in liquidity, creating a truly all-over mesh network. But the crumbs for 0x take shape if you understand it is attempting to be the asset transmission protocol for all of crypto and eventually real-world assets, which come from their partnership with Harbor. The two are working together to optimize a security token stack to help facilitate compliant trading through the 0x Relayer ecosystem. And just in September, Harbor tokenized 100 million of real estate funds on Ethereum. And then, like they say, follow the money. So Fred Ursum, co-founder of Coinbase, is an advisor and early investor in 0x. Now in 2018, Fred and Matt Huang of Sequoia Capital decided to form a crypto fund of their own, Paradigm, which Matt left Sequoia to work on. Well, Paradigm raised $400 million in 2018. One of the investments was from the Yale Endowment, a major institutional investment. And from this same article, we see that Sequoia, Matt's former employer, is also an investor in this fund. Sequoia is a major venture firm with their tentacles in many large companies. But the one we are interested in is PayPal, as you see those two ugly dudes down there. That is Peter Thiel and Elon Musk. Now what about these two? Well, PayPal talked about cryptocurrency in May from their CFO's mouth, John Rainey. Let's hear what he had to say.
I'm curious your thoughts, PayPal's thoughts on Bitcoin, because we just heard that Fidelity is now getting into the business, continuing to legitimize this cryptocurrency. Any plans in the future to get into that business yourself?
So we actually allowed our merchants to accept Bitcoin as a form of payment years ago. And what we saw, because of the instability of the currency, the fact that there was so much volatility from one day to the next, if a merchant accepted that, they would quickly convert it into a more stable currency like the euro or US dollar. And so there wasn't a lot of appetite for that. And so, we have teams that are clearly working on blockchain and in cryptocurrency as well. And we want to participate in that in whatever form it takes in the future. I just think it's a little early on right now.
So PayPal teams are clearly working on blockchain. He just feels it's a little early for Bitcoin right now. Keyword there is Bitcoin. So Ethereum, 0x protocol, PayPal. Makes sense if PayPal was getting into crypto, especially a public chain. Connecting the dots, Coinbase, Paradigm, Sequoia, PayPal. I couldn't have done it without Chico Army member Patrick. Thanks for the help, bro, and as always, I'll see you guys next time. Cheers.